ProShares this week came up with the first US Bitcoin linked ETF BITO, which sounds like a great news for digital currencies. In this video, we are going to talk about what is this Bitcoin ETF, why they launched it at the first place, is it the right time to buy now or you should wait, and at the end, what is my perspective about it. Hi, my name is Sunny and I make videos that affect a common man financially. If you're new to this channel, please smash that like button while subscribing to the channel, as it will help me with the YouTube algorithm and it will be highly appreciated. ProShares launched their Bitcoin Strategy ETF BITO, which is the first US Bitcoin linked ETF where the investors have the opportunity to invest in the crypto space through conventional investment accounts. Now, if you're new to the investing world, you may ask, what is an ETF? It is a type of security that tracks an index, sector, commodity, or any other asset class which can be bought or sold on the stock exchange that can be structured to track specific investment strategies. There has been a talk for a while about Bitcoin based ETF. Many have tried, but ProShares became the first to be approved by SEC in the United States. On its first day of trading, it rose more than 4% on the New York Stock Exchange to close at $41.94. The most important fact before you invest in this ETF is it tracks Bitcoin futures or contracts, thus in a way speculating about the future price of Bitcoin, but does not invest directly in the Bitcoin itself. In simple terms, it means when you buy this ETF, you're not buying the underlying asset, which is the Bitcoin. Rather, you're getting exposure to Bitcoin futures. That is why its website says the price and the performance of Bitcoin futures should be expected to differ from its current spot price. The first day of trading showed there was an inherent demand for Bitcoin based ETF. It's a different story whether it is based on the future price of the Bitcoin or its today's spot price. We all know that buying a digital currency can be quite challenging for a common man, especially if you're not that tech savvy. It can be a daunting task where you have to buy it on one platform, transfer funds from your bank online, open a digital wallet where everything is opened, managed, and stored online. But conventionally, we are used to opening up investment accounts with the bank where you can buy or sell stocks, mutual funds, or ETFs directly. Since this is an ETF based on the conventional platform, so like other investments in your stock portfolio, you can buy it from New York Stock Exchange, which brings the ease of use. Is it a good thing? I think the answer is yes or no. The ease of use comes with the cost associated with it, which is called expense ratio, which for this ETF is 0.95%. In simple terms, if you invest $10,000 in it, they will charge you $95 as expense to operate this ETF. I've mentioned it earlier and I'm going to say it again. This ETF tries to track the futures contract in Bitcoin rather than the present spot price of it. Thus, when you are buying it, it's not you're buying the underlying asset, which is a Bitcoin, rather it's futures, which are two very different things. But on the flip side, it can be a good thing for people who trade rather than invest, where they can ride the futures volatility of the Bitcoin. It is evident from its success up till now that many more fund houses are planning to come up with similar products. Therefore, if you're planning to buy it now, maybe it's worth waiting for the new ones. Let this mature a bit. Maybe the new ones have a lower expense ratio and different strategies. Just give it a thought. I find the whole digital currency space to be very volatile as far as pricing is concerned. Wild swings of 30 to 40% in a month are very common. As a result, some people love this kind of volatility where they can ride the wave to make money. For me, an asset which can move up and down just by a tweet at this moment is some time away to be considered as stable currency. But there is nothing wrong with having exposure to an alternative asset class where I would be comfortable having 5 to 10% of exposure in my portfolio. Now, specifically about BITO, its price will track the Bitcoin futures, not the underlying asset Bitcoin. Therefore, if I want to have exposure in that asset class, I would rather buy Bitcoin directly rather than buying this ETF. Future contracts come with leverage, and I'm very adverse to having any sort of leverage in my investment except for a mortgage where we have no other way out. Now, the volatile digital currencies can be risky if they drop 25 to 40% rather than going up, and we have inbuilt leverage too. Investing is all about managing your risk, growing your money, and protecting your downside. That is why I have always stayed away from trading and focused my attention onto long term investing. But that is me, I might be wrong. I strongly suggest that you do your own due diligence before investing. As a disclaimer, I'm not a financial advisor. Please consult one before investing based on your personal financial situation. This is my take on the topic, new Bitcoin ETF BITO. If you like the content that I make, please help me and my channel by liking, sharing, and subscribing to it. Thanks for watching and see you in the next one.